If you're getting a loan to buy a house and you're unable to put down 20% of the purchase price, then the bank is going to require that you buy private mortgage insurance, or PMI. PMI protects the lender in case you default on the loan. So if you stop making your mortgage payments, the insurance pays the bank. It still means that the bank is going to foreclose on your house and try to get back even more money that way. However, it's something that's required. So it's important that you keep track of this because private mortgage insurance is very expensive, and the bank will let you keep on paying it even when you have a right to cancel it. So what will happen is when you on the day of the closing, usually you'll go to your lawyer's office and you'll sign a stack of closing documents, 100 pages or more. And one of these documents will be a notice regarding PMI. And the lawyer should really take time to explain this to you, though in some cases they don't, or it's just such an overwhelming amount of paperwork and information that the borrower hears the explanation but really doesn't keep it in mind. So private mortgage insurance will end in one of two ways. First of all, you can cancel it when the principal amount of your loan is 80% or more of the original price of the property. So in other words, when you have 20% equity in the house, you can cancel the private mortgage insurance. And to do this, you need to request in writing that the bank cancel it, and you have to have a good payment history, and the bank may be able to ask you additional questions such as whether the house has lost its value or not over the years that you've owned it, whether there's junior liens on the property. You can also cancel it when the scheduled payments will get you to 20% equity. So either you can make a big payment early on and bring your equity up to 20% and cancel then, or when it's scheduled to happen, when you're scheduled to have 20% equity, you could then cancel. Now, if you don't actively cancel, the bank will keep the private mortgage insurance in place for a whole nother year. So you will continue to make private mortgage insurance payments until you're up to 22% equity in the house. Right? It's a total waste of money, and you're especially losing money if you make a big payment up front, or you pay additional every month or every year. You could go on paying, you could hit 20% equity and go on paying private mortgage insurance for several years after that. All right? So understand what private mortgage insurance is. It's expensive. Look at your statements, your bank statements, your escrow accounts that they'll send to you, and see what you're paying every month. It's a lot. And be aware of the principal amount of the loan and how much equity you have in the house. And if you have 20% or more, cancel your private mortgage insurance as soon as you can. You'll save a ton of money. If you have questions, if you need legal help, contact me, send me a message, send me an email, and I'll reach out to you, and I'd be happy to help you.